What is up, everyone? Nick here. In today's episode, we're going to be talking about some new developments coming out regarding NIO's software update, analysis on the ET7, and why CICC believes this could be a game changer for the company moving forward, looking at some huge catalysts coming, and finally, where we can expect shares to climb in the next few trading periods. Have we completely turned the corner, and can we expect the march back up to all-time new highs in anticipation of the ET7 release and the chip shortage crisis easing in the next few weeks? Before we get to it today, Webull is giving out 2 free stocks worth up to $1,850. Free. Who doesn't like free stocks? And 2 of them. You could trade before and after hours markets, which can be crucial. We all know the early bird gets the worm. All you have to do is use the link in my description. Really is a no-brainer. Anyways, folks, let's jump right into it. No time to waste. Okay, so first things first, let's take a quick peek at valuations as of today. Shares traded virtually sideways today in the low 40s, up around 8% over the course of the past 5 trading periods. So before moving into where shares could ultimately reach in the coming few weeks, let's take a look at NIO's newest briefings. We know that NIO is setting themselves apart from the pack to being superior to competitors in virtually every single way. Management sees this as a must-have in their business ops and a fundamental aspect driving sales. They have relentlessly poured capital into R&D to develop top-of-the-line models and software, and the company expects to dominate and, for the time being, stay in the luxury sphere. The company can afford to use and implement transformative disruptive technology in their vehicles where economy models can't, which then draws in more consumers. Something we've been seeing with their heightened pre-orders on the ET7. NIO recently released their newest OS version 2.10.1, which hosts a number of upgrades. The time required to charge their batteries, this through, of course, their plug and charge method, from 20% to 90% has now been reduced by about 10%. Users can remotely launch this new feature, really showing the power of their integration. Any reduction in battery time is a major check in the win column for both this company and for EVs in general. They also launched a host of software upgrades and other repairs. Now, going into one of China's top investment banks, CICC's analysis on NIO stock and where their shares could move. We have long known that there is a strong correlation between NIO's delivery numbers and the resultant share price. This, of course, for many is the main metric driving their business model. Can't have a business without selling product. We actually typically see analyst upgrades actually catalyze big single-day or 5-day week share movements, and this actually typically lags behind the company releasing the delivery data itself. I have actually been using this to my advantage for over a year now, investing in the company based off their fundamentals and their numbers, and not overly concerning myself with what the masses are doing. By doing this, I've been in prior to all the analyst upgrades and have felt the majority of the valuation surges. Now, we witnessed a massive pullback over the past few months, its peak to trough amounting to a massive loss of around 54%. However, shares have indeed been crawling their way back up yet again. Now, what can we expect moving forward? Where do we think shares are headed in the short and medium term? We need to understand why shares entered the steep consolidation in the first place. This was primarily due to a few factors. Investor sentiment returning to inline thinking, back to reality in a sense. I do think NIO is currently undervalued. However, the share price rose far too dramatically and quickly, and hence consolidated sharply. NIO actually had the highest turnover rate for a few trading periods of around $27.4 billion USD, which topped the US stocks. Think about this. NIO exceeded massive companies like Apple, Amazon, Microsoft. The EV space was red hot, and I do think we are about to see another mass resurgence of these stocks coming in a few weeks. We have been noticing volumes steadily moving up as NIO lessens its downward slides in volatility. Its beta value is also decreasing in the past few trading periods. It's trading at a much more enticing valuation, and analysts see potential huge moves in the coming months. And why is this? What are they seeing? Well, as I've been saying for months now, we need to remember that NIO's ET7 is set to begin deliveries in Q1 2022. This is their first sedan on the market, and we know that the Chinese consumer has been moving to smaller vehicles, such as sedans, in recent years. We see some EV competitors doing huge sedan numbers like Xpeng's P7, and although this is much less expensive, it is performing extremely well. Now, in terms of Tesla, although the ET7 is not a direct Model 3 competitor, I do think it will be able to carve out a large portion of Tesla's Chinese market. Firstly, you have the US-Chinese tensions. We also have these subsidy programs. Because Tesla doesn't currently apply for as many Chinese EV subsidies due to not having an actual removable battery, with the subsidy program implemented into a NIO, the two vehicles, the ET7 and Model 3, are actually quite similar in pricing. Along with battery as a service, the cost can really be brought down substantially. We also need to remember that NIO is quickly becoming China pride, and I do think if given the option between similarly high-priced luxury EVs, the Chinese consumer will gravitate towards something domestic, NIO. Now we have more catalysts. The global chip shortage diminishing downstream deliveries is expected to ease moving into Q3 this year. And as a long-term investor, it's important to note that the near-term future is often priced into shares before it actually presents itself. NIO maintained guidance for Q2 while falling in deliveries for its third straight month. Let's think about what this means. This means that they expect to hit a record high delivery in June in order to see this through, which signifies that there may be an increasing chip supply, and I am extremely eager and hopeful that NIO is able to break the 8,000 vehicle mark in June. We also know from historical data that we are quickly moving into the peak seasons of vehicle sales in China. H2 is much more robust than the first half, and paired with chip supply increase, I do think NIO will inch its way back up to its previous estimations of around 10,000 vehicles sold per month. We need not forget NIO's expansion plans, notably on their massive NIO Park and on their JAC Motors plant, amounting to potentially 1.3 million vehicles of feasible capacity in 2022. We also have their European expansion into Oslo. There's also relentless Power North developments in the less dense northern areas of China, implementing swapping infrastructure targeting underserved markets. We also have NIO planning on reaching 500 battery swapping stations by year's end, something the company sees as almost free advertising, really drawing in more consumers, less wait times, less mileage anxiety, applicable to subsidy programs, and something that's really going to draw in the Chinese consumer. CICC is also anticipating a massive boom in electric vehicle sales coming across the board. Much in the same way that video games increase in volume when, say, Sony and Microsoft release new consoles, vehicle sales increase across the board when the companies release new vehicles, and this typically happens in conjunction with one another. The big three EV startups in China are all gearing up for historic releases. Xpeng's P5, Li Auto's 2021 Li 1, and NIO's ET7 are expected to cause a frenzy in the EV market wide, driving up sales of all EVs in general. NIO also has the most robust cash position between the three at 42.4 billion renminbi, a massive war chest, more than $7 billion USD sitting in the bank. They are extremely well positioned in my point of view and are making great long-term moves. I love the management. They also have their 150 kilowatt-hour battery cell pack expected to grant around 1,000 kilometers NEDC range that will be implemented into the ET7. Have I made my point clear enough yet? The catalysts are on their way. I haven't even talked about their autonomous driving superior capabilities through Aquila full stack NAD. The company is doing everything better than competitors in my opinion, and I do think that within 1 year, we will see triple digits in their share price. There is also growing talk that NIO could become somewhat of a meme stock. There's increased chatter online in threads. I personally don't think this is going to happen to the full extent, such as AMC or GME has felt, but I do think we could see increased investor interest. They do have a high percentage of shares short. They are a hot stock, they're relatively inexpensive, and they do have high turnover. Anyways, everyone, let me know what you think about NIO. Are you currently buying, selling, or holding? I am truly curious. Let me know in the comments. Don't forget about the Webull promo, 2 free stocks worth up to $1,850 for free. 2 free stocks. You could trade before and after hours markets. This really is a no-brainer. All you have to do is use the link in my description. Anyways, folks, I'll see you all in the next video. Take care. Happy trading. Cheers.